All right, I'm going to do one more video. I posted this on the previous video, but my understanding is that people won't get updates on this. So this explains my situation to the left here uh, and my plans. And this is a monthly chart on gold. Sometimes you need to go back to the bigger time frames and reassess and have a clear plan as to what you think's going on. And sometimes because the higher time frames have less detail, but in a way, much more clear structure. It's a clearer message. You can see that when the market gapped higher, it came back and retested that gap, and that's where the market traded. And that would be expected. And if the market moves to a lower level, it would be to that blue line. This was a breakout, and then the market retested, that went higher. And that blue line is confluent with the fib relationship, and it's a 3A2 drawn from the beginning of this swing in December of um, 2015 to the high here. And these swings are very important. And 3A2s, if you pick your pivots carefully, really reflect very nicely how the market moves. An example, if when the market made a new high here, and it's all in the pivots that you use for your for the basis of how the market trades. When the market moves from the low to the high here, what does it do? It corrects to the 3A2. And if I wanted, I could draw another blue line that shows that that's a breakout and a retest. And that sets you up for the trade higher. And as the market evolves and the market expands, this pivot to here expands further to this level. So you incorporate the whole swing, you'll get that kind of a correction. It's stunning how repeatable it is. Nothing happens every time, and nothing is exactly perfect. And the analysis is not just the fib level, but how the market's trading. And so it all fits. So the probability of this market, if it moves lower, and I think that it will move lower. It's at that area that if it moves lower, it will accelerate. Now I don't know how fast. I think I know how much it'll accelerate. It'll trade to this lower level. Now on a smaller time frame, this is a substantial move. It's close to $100. But this market, when you look at the patterns and how it trades to the fib relationships and to the support resistance, this is the market. This is the time frame that shows you with clarity that the market is likely to trade to this level. It won't be perfect, but whatever it is, we'll trade the market looking at the tools that we use, and we'll make judgments according to how the market expands and contracts. So if I knock this to the higher time frame, the lower time frame, we'll make it a weekly chart. So you'll see with more detail how the market moves, and your perception of a target should be consistent here. Now, when you knock this thing down to a daily chart, where you may be spending more time because you're more comfortable with a daily chart, it's not as clear on this to me. I mean, I still think there's some structure here. There's no structure on this on the higher time frames. It's just a couple of monthly bars. And so my perception of how the market would move is actually more clear. Now, I know that can happen because I know when you have relatively very small structure to this, you do have higher highs and higher lows. I am not expanding this so you can see it more clearly. This is all you need to see. But there's clarity with the monthly chart, and so it's worth a minute or two to do that. And when you go to the monthly chart, you're more likely to select the appropriate pivot points for the 3A2. It's just easier. It's a matter of efficiency and clarity. So we'll watch and see how this trades. And what happened here, though, as the market's moving lower, we found great trades. We found great trades when the market moved higher. But sometimes the market, even though it's likely to move lower because the market had lower lows and lower highs, and it came back, had a very small stop. So this is it's a lower high from the previous high. But they take the uniqueness and the properties as the market moves lower. You can trade it, and that's all I can say with it. So when the buyers are still holding this area, it's a double bottom. This market could trade higher and get back to the other side of this box here, of this line. I say a box because I'd be drawing a box here. Frequently, I'd be drawing a box here. It's not necessary here, but this is analogous to a breakout failure that gets back into the market, and then you have to judge what it's going to do. So you don't want to be glued to this target, but the probability is accounting for how the market will trade, how the buyers and sellers will handle this support resistance line here. Um, it'll probably work out that ultimately the sellers will prevail, or else the way I think of it as is that the buyers will give up, and the buyers will be here. You know where they'll be. So your trade location, knowing where the buyers and sellers are, give you an idea of how to trade the market. And I spent a lot of time on this, but I thought um, it deserved this clarity. And so since I have a few more minutes, and I'll use up the time of this video, and then you can you can read the beginning part of it, what my plans are. But let's close this, and let's look. I hope it's here. I should have planned for this video. There's too much clutter here. Let's turn this down to a daily chart. And this is what I want to talk about. The review of this is that the market managed to make its way down, and we analyzed the market, and if there were trades, we described what they would be and where the market was likely to go. The market finds the support area, and it makes a nice move to here, and it retests the gap. So nothing, and when it does that, you see that there's very little structure here, and that's part of the analysis to trigger you to think that there's a good chance the market will move higher because there's not a lot of resistance from this. And so it does that, and that's thousands of dollars, whatever it is. I don't remember the number. I want to say 7,000 per contract, but I could be wrong. And when it retests the gap here, it is a bullish pattern in that it has higher tops and higher bottoms. And the optimal trade is to take this if you're not worried about the price action, which is bullish, and you don't necessarily want to short into bullish price action. But the market retraced to the 382 from the top here to this level. This is the 382. And so 382 is a resistance. It has a bullish price action, but in context of this market, it's not a trending market. It's a market that's been making lower lows and lower highs. So it's a judgment call. I like to look at price action, and it can be my trigger. If it's too bullish, I'm still not going to short this market. But if you're a little bit more open-minded and you're willing to discretionarily make a decision, this may be your short trade. And if it is, the market goes lower, and that's all I can say. It doesn't just go lower though. What it does, it goes lower here, and then it retests this gap. So it's possible to take a trade here to the gap, and I think that's a $3,000 move. But what does the market do? It finds buyers. You can call it a double bottom or a gap. It's not clear to call this a double bottom because we're talking about a press. It would look more like using a smaller time frame, like a 4-hour chart. It'll give you more definition. And based on this market, you may see that if the market trades to this area, this would be the gap as represented on the 4-hour chart. You may take a profit here, and or you can wait for the market to go lower. But you know that looking at this time frame, that there probably is going to be some support when the market moves lower like this. I would be looking at range boxes. I would be looking at measured moves. So just looking at this, I don't see anything particular. This is probably a 1.618. I'm talking fast, and I'm going through this quickly, but I want to get to a point here before I run out of time, because there's something that scalpers, not my cup of tea, but we're going to talk about it anyway, because that is an option for some traders. They want to scalp. Though when they scalp, they won't trade with the best risk-reward relationships, but I will show you how different traders may handle this market, and they handle it differently because their priorities and their parameters that are required are different. So let me do this real fast here. This is I'm trying to figure out what I want to do. So I want to do this. I want to find this tool. I changed the location because of the previous video. And I want to look at, I think it's a, let's see where this is here. Well, it's, let me see this. I'm going to put all of them in so I don't have to guess, so I can move on with this. So I would look at this market when it, and decide if I want to take a short. And then I want to find a target. And on this time frame, this would be a likely target. It trades lower to this gap. And so, but if I looked at a fib relationship and I see that the market makes a move like this to here, so the market finds a bottom and has a corrective swing, then if I draw that, I can look for one of the fib extensions. And I thought it was a 1.618, but I wasn't sure, so I didn't want to make any mistakes with it. So the market corrected to where it gapped higher, and a 1.618 is a reversal pattern. It's an extension. 1.272, 1.618 in measured move. But that's one way that I corroborate my decision to take profits. And then I'll maximize my reward. The other fib level that I could use, let me take this off, is the market correcting like this and moving lower. Now this is going to be more than a measured move, but we're still going to look at it as a measured move. And you'll see what I mean when I draw it. And I will expand it so the bars are a little darker and more accentuated. But let's get a measured move first so I can do this quickly. So I would look at something like this. And then I'll expand it so you can see the bars. And this I can see pretty clearly. But in any case, I can see the gap below this bar, and the market comes to this area. And if I take profits, I'll leave a little bit on the table. But ultimately, this market comes back and it tests a higher level. So sometimes I use the extensions. I use I call it structure, but really it's a breakout higher. And sometimes I use structure. And so I could target a trade that it's going to be a couple $1,000s. I only have a few minutes left, and I want to talk about this trade because on a daily chart, to remind you, because we've talked about this a couple times and on a couple of videos, let's take out some of the clutter here. Let's take this out. And when you're going to scalp, you don't want too many lines on the chart. It's too disruptive. You don't have time to do it. You need to think fast, and you need to hone your skills. If you're going to scalp, I don't recommend it because of risk reward issues, and you're going to have some trades. If you're really good at this, you'll whip out a few good trades, but because you're not really thinking in terms of risk as it relates to structure, because there is no structure inside the trade here, because you're scalping in a very limited area of price. So risk rewards out the window. But in any case, that being said, when the market closes here on a Friday, I'm looking for the market to gap higher. I need to make sure I get this right. This is a daily chart, and I should see the gap here somewhere. And I'm trying to do this without running out of time here. And what happens is the market, when it traded lower, it gapped below this bar. And then the market goes lower, and when it comes back, it can't close the gap. And that's bearish. Now, that could be bearish, but the fact that it doesn't close the gap and it moves lower makes it bearish. And it increases the probability that the market will move lower. How much lower? It depends on other things that are going on. But we certainly see there's a support area. So there's a higher probability because of the gap and the market couldn't test it again and went lower, that the market will trade to this support area, especially when there's no structure here. It's just a press of higher tops and higher lows. And so when I see this, I think the market could come to the support, but it also could go lower because the market keeps on testing the support. It had a nice reversal at the 382. It's been making lower lows and lower highs. I think that the market has a higher probability of doing this. However, I know that when the market gets to the support, there will be buyers who lock in their money. They'll buy to close their short positions because they made a nice move. It was about over a $3,000 move if you took the short here. It's even a bigger move if you took it here. If you traded here and you stayed in the market, because basically you have lower tops and bottoms. You have a market that's pressing lower. This whole thing is suppressed. So if you get in here, you have it even better, and the market goes many thousands of dollars more. How much? Well, I don't want to count it because I'm going to lose time. So, but it's thousands of dollars. Now, I want to show you something here if you're a scalper. And so what I said, I might do this, and then I would stay in it if it goes lower because I'm trading with their money, or I may take a profit. Or if I'm not trading this at all, I might be a buyer here. This market has no structure here, and it has no structure here. So look what happens in this market on a 4-hour chart. The market actually does trade higher. It finds buyers at the support area. It comes back and it retests the breakout lower. This is a gap. It gaps lower and it comes back and retests this. This is a couple $1,000s. And then after that, what does it do? It continues going lower. So the market's trading to the dynamics of support and resistance, lack of structure. The market moves in a way that's consistent with the characteristic of this swing, which is really better represented on the daily chart. So you should know that there's minor structure, but there's none on the daily. And with lines that look straight like this and this, the market will trade with volatility. You can scalp this market, or you can get into this market after you took profits here and stay in the market for a new low. Lots of things to do, but very clear patterns and